So here we go. Before we dive into class, I wanted to mention something that came to me this past weekend when talking with a friend of mine. Everybody knows the phrase, good things happen to good people, right? And the whole concept that if you just go about your life, carry yourself the right way, treat people with respect and kindness, that, good things will come your way if you do things the quote-unquote right way. And it got me thinking that the same can be said of trading. And what I mean by that is, in my opinion, good trades happen to good traders, okay? And what I mean by that point is you need to develop good habits, okay? Everything you're doing now is going to establish the type of trader you become in your trading career, okay? So you need to have your set of rules that you follow, right? Just like you have a set of rules that you follow as a person, okay? And you need to develop those habits so that they stay with you. And you know what habits will work for you, and you know what rules you need to follow, at least you should by now. And each one of those should be unique to you. And my point is that if you follow that, even if you might have days where you lose money now, okay, it's going to pay off in the end, because good trades will happen to good traders. So if you develop the characteristics that are associated with being a good trader now, okay, eventually you'll just start making good trades. The money will take care of itself. And that's something that I think is very hard to understand when you're new to trading, is you see other people making money and you wonder, what am I doing wrong, right? It might not be that you're doing anything wrong. It just might be you don't realize what you're doing right. Because when you're brand new at something, it's hard to recognize what your strengths are and what your weaknesses are. The only way to find out what those strengths and weaknesses are for you is to have those experiences. So I know this can be frustrating at times, but you need to stay the course and you need to stay positive. And you need to believe that you're a good trader and you're making good trades. And again, we have numerous articles written on, even if you lose money, that doesn't mean you're making a bad trade, okay? That's not the definition of a good trade. And it's the same in life. As a person, if something bad in your life happens to you, you know how to view it positively, and you know how to overcome it. And that's the same in trading. You need to have that positive aspect that you know not only is there a light at the end of the tunnel's not that long, and the light is very, very bright. So I just wanted to speak to that point because I know that it's something that when I thought of, it was kind of like, oh, I really like that phrase. And already this week, I've caught myself repeating it to myself. Okay. Secondly, since we only have 2 questions, I wanted to point this out for some of the newer people who joined us in the options room this week, and we've had a lot, just to show you that these gains are very real. So Chipotle was one of the stocks we targeted for an options trade this week, and we laid out why we liked it for a downside move. And we talked about the 400 strike puts, and we said selling for $3.20, the 400 strike puts expiring this week could lead to an outsized return if Chipotle breaks down. Now, remember, we pointed those out at $3.20. You could have bought them today for $2.95. You could have had them all day for between $2.60 and $3 and up to $4 yesterday. Look at what these did today, okay? These puts, this is a chart this is a 15-minute chart of these puts, okay? You can see the Chipotle, May 2011, May 11, 2012, 400 puts. They opened at $2.95, and within the first hour and a half of trading, they hit a high of $9.30 on real volume too. You could have easily bought 10 contracts down here for $3,000 and sold them up here for $9,000. Okay, so the puts rose 200%. I'm showing you this now, right? All Chipotle did was fall from 407 to 393 or so. So Chipotle fell 3%. Meanwhile, the puts rose 200%. Right? But what I especially want to point out is just like they went from $3 all the way up to $9.30, they fell from $9.30 all the way back down to $3.30. So they fell about 70% from the high of the day, even though all Chipotle did was bounce, 1.5% or so on the day. So that's why with options, it's different than stocks, because you need to, when you have your profits and you have those big returns like that, you got to be sure to take them. You can't get greedy, because if you were in this trade on Chipotle and you got greedy, you gave up all of your gains. So I especially wanted to point this out because we've been talking a lot about the potential with options, and it's definitely there. I mean, $3 to $10, who can argue with that? But I felt that we needed to do a better job of showing the risks associated with options as well. Because just like it took them an hour and a half to go from $3 to $10, it took them an hour and a half to go from $10 back down to $4, and then later on they dropped all the way down to $3. So it's not all just fun and games. I mean, you really need to be alert and active if you're going to get into trading these things. And again, there's no law that says you have to learn to trade options right away and you have to start trading them right away. I strongly recommend that you watch options trade in real time, because even though I'm showing you this chart now, if you saw it happen, it might have a different effect where you see, oh man, I really got to be careful with these. I would hate to have been buying. I mean, imagine who the person was buying up here at $7.50, $8, $9. They lost 50 to 70% if they didn't take their losses. So I felt this was a good example of showing the extreme reward with options, but also the potential risk. So that's why I wanted to point that out. Okay, moving on to the questions we got today. First question is in regard to when stocks gap, or determining that a stock is going to gap. In the penny market, where there are no after-hours trading, what causes a gap move? How does the price move overnight? People always talk about the gap plays, but I want to understand what makes a gap play and also what determines if a gap is actually going to gap. So if a stock is actually going to gap. First of all, the price does not move overnight. The price moves because market makers can't have the ability to buy and sell stocks pre-market. And remember, a market maker's job is to create an orderly marketplace so that stocks do not move up too fast or fall too fast, and that they remain liquid. Okay? So they don't move overnight. So then what would cause a stock to gap is if a market maker like E-Trade, which is ETMM for example, notices that there are a ton of orders, buy orders, being placed on a particular stock pre-market. Okay? So then what that market maker will do is he'll then start gapping the stock, because he can. right? A market maker, not only is their job to create an orderly marketplace, their job is also to make money for their firm. They're trading and they're buying and selling for a profit just like you and I. So you take a stock like DOMK, for example, which gapped up pretty significantly. So it closed at $3.16 and it gapped up to $3.45. So that's a monster gap, 30-cent gap. The reason that gap happened is because probably around 7:30 or 8:30 Eastern or 9 o'clock or so, the market makers noticed that, wow, there's a ton of pending buy orders for DOMK that are, the limit orders are 330 or 340, or they're market buy orders, something we never recommend, and we never recommend buying a gap right away either, but that's another story. Okay, so then what they do is they realize, well, hell, why should we open it at 316 when we can start selling shares just as easily at 345? Not only will that make us more money, that'll make our clients more money, our customers more money, because now if I bought, instead of being able to sell at 316, I'm able to sell at 345, so I'm happy, okay? And everybody's happy who, bought in for the gap, right? The market makers are happy and the traders are happy, okay? So that's what will cause a gap. It has to do with demand, just like everything has to do with demand in terms of if prices are rising or not, okay? So if prices start rising pre-market, that's because the market maker sees greater demand than usual. All right, and that was exemplified in DOMK. Look at all this volume within the first 5 minutes of trading today compared to yesterday. Far greater volume today than it was with yesterday, and as a result, you had a far greater gap today than you did yesterday compared to Friday. Okay, and if we look at a 15-minute chart, you can see that even more clearly. You can see this huge demand compared to the 15 minutes to start the day on Monday. And you can see here on Monday within the first 15 minutes, it didn't gap that hard, and the market makers didn't gap it. Why? Because the 15-minute chart shows there wasn't a significant increase in demand pending pre-market, and that's reflected within the first 15 minutes of trading versus the first 15 minutes of trading today. And if you go back to Friday and look at the first 15 minutes of trading, when it actually gapped down, it's reflected even more so, because you actually had supply and very, very little demand as compared to what would have been Thursday. So demand, greater demand than usual or relative to average or compared to the prior day as the stock is rising is what's going to cause a gap higher. Now, as for what determines if a stock is actually going to gap, I know that I don't need to answer this question. Somebody in chat can answer it. How do we determine if a stock is going to gap the next day? Newsletter promo, that's one way. Demand, high volume, previous gap, and it's by the high of the day. I like guests answer the best. End of day demand. End of day demand. And where, I would say end of day demand and where we're closing. We need to be closing near the high of the day. And, the promo, obviously, but that, I think that kind of goes without saying. My man Phil delivering the answer I was ultimately looking for. If the market was open an additional 15 minutes, where would this stock go? That will be the best indicator when you're determining if a stock is going to gap. Before you think about buying a stock for a gap, ask yourself, if the market was open until 4:15 p.m. versus 4 p.m., would this stock go higher than where it is now? And the reason we ask ourselves that question is because the next 15 minutes after the close is going to be the first 15 minutes tomorrow morning, because the market isn't open until 4:15 p.m. It's closed at 4 p.m., right? So you want to ask yourself, if the market was open an additional 15 minutes, where would this stock go? Is it showing signs that demand is going to be very strong? Because if it's showing signs that demand is strong through the end of the day, then you can assume that demand will be strong within the first 15 minutes of the day tomorrow. Because why is that demand just going to go away? Most likely it's not, unless, some type of news comes out that hurts the stock, like on SYNC we saw today. But let's take a look here at DOMK. Okay. So this is a 5-minute chart of DOMK for the last 2 days. But let's look at just yesterday. What do we notice about the last 5 minutes of the day? This is a 5-minute chart of Monday, so of yesterday. What do we notice about these 5 minutes, this last 5-minute interval on DOMK? Exactly. Highest volume of the day. Great identification of that, Laker. Highest volume of the day. And as DJ points out, huge volume almost at the high of the day as well. So not only do we have a lot of demand the last 5 minutes of the day, that demand is coming in at the highest point the stock has been at ever, right? Because this is all we had coming into today. So when looking at that 5-minute chart for DOMK for yesterday, and we're deciding, should we take it for a gapper? We ask ourselves that question. If the market was open until 4:15 versus 4 o'clock, would this stock go higher than where it is now? Well, here's the last 5 minutes of the day. If the market was open until 4:15, I would be saying to myself, man, DOMK just had the highest volume it's had all day at the highest price it's been at all day. So that tells me that even at all-time highs, demand is still exceeding supply. Therefore, I expect it to go higher. So that right there is how you would determine that you're going to take it for a gap. And then sure enough, here you go, just got a beautiful gap. Now again, SYNC, SYNC had the same type of setup yesterday. Okay. But, well, let's see. Am I zooming in correctly on SYNC? Oops. Sorry, guys. Okay, here we go. SYNC had the same type of setup. You had high volume. However, this is different from DOMK in a couple ways. Some people want to point out the differences between SYNC's 5-minute chart and DOMK, because I know some people took SYNC for a gapper. Not high a day, and Ken and guessed with my favorite answers. No price action. Indecision. DJ as well. Downtrending at the end of the day. Right? And indecision, right? So number one, we're not at the high of the day. Number two, no price action, which represents indecision, as you guys pointed out. And in turn, that represents an equal balance of supply versus demand. That's not how we determine gappers, right? We determine gappers by demand outweighing supply in terms of a demand, in terms of a gap higher, right? So this, to me, based on this, if you ask this question, if the market was open until 4:15 versus 4 o'clock, where would this stock go? For SYNC, you have to say it's unknown. There is not a clear direction where this is going to go because, as you guys pointed out, the chart is showing indecision. So that, to me, right away, was my clue that this wasn't safe for a gap, okay? Now, it gapped down tremendously. Now, obviously, this had a lot to do with news, but I'm just saying, if you use the criteria we talk about for gap plays, you would have been saved this ugly 10% gap down. LUXR. So this gapped higher today as well. And again, this is just more examples when you look at this 5-minute chart from yesterday. Now, this chart, all the things we've talked about with DOMK, we can say the same thing. Yes, volume isn't the highest it's been, but it's near the highs for the day, and even better, the price is closing at the high of the day, which means even at all-time highs, just like with DOMK, supply was not exceeding demand. In fact, demand was exceeding supply, where, again, if we go back to our question that we're going to ask ourselves when determining gap plays, I would have said this stock is likely to go higher based on what I'm seeing. And then sure enough, today, again, you had a great gap to sell into from closed at 206, opened at 232. So between DOMK and LUXR, you know, you could have combined those gains for 25% and just called it a day. Okay? Now, secondly, the second question has to do with somebody trading ATYG and talking about how, you know, everything they saw for an entry point was there, but as soon as they bought it, the volume died off and the stock took a nosedive. He had his trend lines at 3.5 and 3.1, and you know, he's curious, is he doing something wrong? Is his analysis off? Should he have waited for a greater pullback? You know, et cetera, et cetera. And this is kind of what I was talking about to open class when I said good trades happen to good traders. Because ATYG, while I'm assuming this person lost money, it didn't exactly give a reason to sell today. Okay. Now, first of all, with his trend lines, I would have plotted resistance right here. There seems to be a lot of congestion at this 003, and I would have plotted it right here because this was a recent high. And those two levels are at 0035 and 003. So him putting his at 003 and 0035 and 0031, I agree. Okay. He waited. He saw very high volume at the open. So that's true. There was very high volume at the open. So he bought in. And I'm assuming it was, you know, right around this 0033, 0034 range. And, you know, then as the chart shows, the volume dropped off. Well, so let's just take a look at ATYG. You know, let's put some things in perspective. Here we have a 15-minute chart. Let's take it even back further. 30-minute chart of the last 13 days. So he's talking about volume dying off, and he seems kind of surprised by this. Now, what do you guys notice about this chart, the intraday chart, ATYG, in regards to volume? Right, exactly. It always drops off. The volume kind of always falls off. You have high volume at the open, and then it drops off. High volume in the morning, and then it drops off. So his point about volume dying off, okay, your trend lines were not way off. I think what this person did is he just ignored the most recent history of the chart. Remember, if we're going to make short-term trades, we need to focus on the short-term history. If we're going to make intermediate trades, we need to focus on the intermediate history. And if we're going to make long-term trades or invest, we need to focus on the long-term history, okay? So assuming this was a short-term trade, the short-term history suggested that when trading ATYG, you should be prepared for intraday periods of really no volume at all. And that's what you had here after the drop-off. So that's number one, okay? Number two, this stock went from 001516 area up to 0063, and then came all the way back down to 002 0019 range. And it's been just consolidating ever since. What don't we like about that? What don't we like about that when a stock does that? Right, bag holders, resistance, and that's what I was going to say next from Big Fish. Gave up all of its gains. Exactly. We don't like stocks that give up all of its gains, because stocks that give up all their gains, it means that they have bag holders, and bag holders mean resistance. Okay? So, you know, again, some of the recent history here suggested that a great increase in volume might be met with a lot of supply from all these bag holders. So, you know, we don't like that. All right? So this more has to do with stock selection versus stock analysis, is that while his resistance areas were spot on, in my opinion, he's maybe just choosing a stock that isn't offering a great risk-reward scenario because of, you know, what the recent history suggests. Now, lastly, based on the daily chart, ATYG put in a higher low today and a higher high, and it only finished down 6%. Generally, in penny stocks, down 6% is not that big of a down move, you know, considering these things drop 30, 40, 50% daily. So while he entered the trade, and judging by his post, you know, I'm assuming he took a loss, ATYG didn't really give a signal to get out of it. It actually put in a third consecutive higher low, something that it's only been able to do one other time since, two other times since this run happened back on April. And it's put in 3 consecutive higher lows 2 times over the last week and a half. You had the higher lows on 430, 5.1, 5.2, and then you had higher lows on 5.4, 5.7, 5.8. You also had 2 up days on 5.4 and 5.7. That's the first time it's had back-to-back up days since April 3rd and April 4th. So actually, in my opinion, ATYG is showing the potential to actually break out of this consolidation channel. Okay, it's just dealing with some resistance from all these bag holders like we talked about. So the couple things that this person did wrong: A, he ignored recent history. He didn't, you know, think hard enough about what this resistance what all this volume from back here and the fact it gave up all of its gains might mean for the stock if high volume did come in. 2, he ignored the volume pattern that has been consistent, which is high volume at the open or greater volume at the open and then trailing off throughout the day. 3, the stock didn't really give a signal to sell. Even though it was down today, it still actually held above its prior day's low. And, you know, obviously he's frustrated by where he bought the stock, but for people who aren't in the stock yet, it actually is still worth watching because there could potentially be some good things going on. So those are the 3 things I noticed with ATYG. And again, this is my point about, you know, good trades will happen to good traders. This person might not have done anything wrong because maybe his strategy is to get in and get out right away. So when that volume came in right away and then it didn't follow through, maybe his strategy is to just get out, cut the loss right away. Maybe that's a strength of his, okay? So he didn't do anything wrong, but he's still learning how to do what's right for him, okay? So maybe he still is holding on to this one and he doesn't want to be, and, you know, he's not going with his type of personality as a trader, all right? This is my point, that at the beginning of your trading career, it takes time and experience to learn what style you're comfortable with. And that's where you need to just develop those characteristics for yourself. And in time, if you stay the course and, you know, stay positive and learn from everything, eventually you'll become a good trader. And as a result, good trades will happen for you. So let's get to some charts. First one, DOMK. So first thing I noticed about DOMK is that it closed well off the highs. So it closed at 426, down from 488. So it closed 12.7% off the high of the day. Looking at the chart for the end of the day, I noticed that there was a downtrend to end the day on the 5-minute chart. The worst downtrend of the day, as a matter of fact. 5 straight down candles. First time that happened all day. First time that's happened in the last 2 days. Okay. High supply volume. Highest volume on the down move all afternoon. Okay, so I don't really like this setup going into the close. It shows a lack of momentum. And that's a hard drop at the end of the day from 488 down to, you know, 425 where it closed. Support, key support is going to be this afternoon low of $4.12 or so. And then ultimately this low. Below this 412 and 391 low, you know, I would consider this done. Resistance is going to be this high of 445. And then this high at 458, you know, and then these highs here in the 480 to 488 range. Again, you're playing with fire here. You could buy DOMK at 425 and target a move to 440, only trying to make 5.5%, 10%. And you could say, I'm not being greedy, but you're asking DOMK to give you a 5 to 10% gain after it has already given everybody else a 100 to 300% gain. So while you might not be being greedy with your strategy, you're being greedy in asking DOMK to do too much for you. It's like when you're sick and a friend offers to get you something, and you tell him, yeah, go get me can you get me a sandwich and some soup? And he does that. And then he comes back and then you say, all right, can you go rent me a movie? And he does that. And then he comes back and you say, can you go get me this? Can you go get me that? Right? All right, so that's kind of what DOMK is to me at this point. It's gotten you soup. It's gotten you a movie. It got you tickets to a baseball game. All right, so just take it for what it is at this point. Don't take advantage of it because eventually it might take advantage of you. So obviously a sick move, but needs to hold some of these key levels, otherwise it could get ugly. SNRY, so a lot of volume out of nowhere. I think this, okay. So high volume today, up 110%. But again, this volume today was only $160,000 or so. Let's look at the, and it looks like the majority of it traded in this one block. Although you had some consistent volume at the open. So this low right here of 7 cents is going to be key. We had a lot of volume trade in that 6.8 to 7.2 range, and then this high was 7.2. So this low right here around 6.8 is really going to be key. And below that, you know, it's already given up a huge portion of the gains. It hit a high at 13 cents and closed around 8 cents. So this thing's off by, 40% off of its highs. That's just not good. We don't like anything about that. So tomorrow, we certainly need to hold above right around 7 cents. And you better believe there's going to be some decent resistance, here in this 8 cent to 10 cent range, because that's where the highest volume traded on the 3-minute chart. So above that, then we'll have resistance here at 13 cents. So GMCR, huge down move, obviously. This one is only for the very experienced, in my opinion. If you're trying to make money on the short side, again, you gotta concern yourself with how greedy you are being. Just like we talked about being greedy with DOMK as far as what you're asking it to do. If you're trying to make money on the short side, the exact opposite is true for GMCR. The money has been made, okay? This thing has already gone from $50 to $24. So now if you're still trying to short it, you're just being foolish, in my opinion. You missed your opportunity on the downside, at least until a further breakdown below yesterday's low of 24.03 happens. You already missed your opportunity. When will the next opportunity come? Well, I'm going to have a lot of resistance here and a lot of resistance at Friday's high, okay? So you've got yesterday's high of 26.65, first resistance point. Well, actually, no, I'm sorry. Today's high of 26.48, so the 26.50 to 26.55, and then Thursday's high of 28, and then, this was Monday's high, and then Friday's high was 28, and then Thursday's high of $30.30. So around these highs is where you would get short using those areas as your stop loss, using those highs as your stop loss. And then as far as if it can break 30.30, the next area of resistance would probably be this low right here at 34.06, right? Because prior support is going to become resistance. So, if anything, you might want to try and trade GMCR from the long side if it can break above today's high of 26 of that 26.50 to 26.65 range. Then you could potentially target a move to 28. If it can break 28, then you could potentially target a move to this high of 30.30. But again, as for the downside, the majority of the money has already been made for this stock on the short side. Looking at the intraday chart, you had a strong trend here off the morning bottom, all right? So a couple key lows. You've got this afternoon low right at 26.15. This low at 26, so just call it 26 to 26.15. And then this low at 25.75 with these lows here at 25.57. So you've got 26 to 26.15, 25.55 to 25.75. Below that, that's when, you know, it's really going to come under pressure again with this low here at, you know, what is 25 bucks. GWBU, one we've been following now, working almost on 100% gain from our initial catch around 40 cents. So just, you know, really everything we said last week is the same this week, okay? We talked about how you can't argue with the price action, meaning that even though the volume is low, the price is reacting very nicely. Higher highs, higher low every day of active trading, okay? So the first thing we're going to look for is for that to change. As soon as we don't get a higher high or as soon as we get a lower low, then we're going to be kind of on alert, on watch for this one. Because that would be something that hasn't happened before. And when a stock is trending and something happens within that trend that hasn't happened, we have to take notice and see what follows that type of action. Now, the one thing I will say on GWBU, a ton of volume traded here, and it's rising on very low volume, which means that a slight increase in supply could bring it down more than your typical stock, just like a very slight increase in demand is bringing it higher, okay? Right now, there's very little of both. The last 2 days, we had a little bit more supply than demand, which caused the slight down moves. And then today, we had just a little bit more demand than supply, which caused the slight up move. Until we see a great increase in demand, we're not going to see a major up move. Last week, I said we needed to see it break 70 cents on greater than 2.5 million shares if we really wanted to see it get going. And that didn't happen today, which is why we didn't see it really get going. Now, from an experience and speculation perspective, if I see this stock dip, you know, into the 50s, back into this range where a lot of this volume traded around 55, I might take a gamble on it if the volume is kind of low, because that would feel like a shakeout to me, kind of like we saw similar shakeouts on LUXR when we caught it at 50 cents and it went up to 75 before falling back down to 50, or STVF as it went from 70 cents up to $1.15 before falling back down to 87 cents. Or, for those of you who remember, long ago, RYUN, which we caught around 20 cents at the time as it went up from 20 to 38 before falling back down to 30 and then into the high 20s again, okay? So, you know, if GWBU has one of those, you know, similar low volume shakes like those other examples I just showed, then I might take a chance on it because I would suspect that it might be a shakeout. Okay, this one, something's definitely going on here. Stocks don't trade this much volume and then hold this many gains for no reason. So definitely want to keep this one on watch, and it's in a great uptrend. Oh, EGT, wild day today. So huge dip, right? Opened up here, and then you got a huge dip down to 80 cents. Really the first real dip it's had. And then a nice bounce up to $1. So about a 25% bounce. Looking at the 60-minute chart, though, this trend definitely exhausted itself. We went below this low from last Tuesday. We went below this low from Friday. You know, Friday's low was below Thursday's low. Monday's high was above Friday's high, yet the volume was very low, so it wasn't that convincing. We finally got high supply down move, and you can see we met resistance back up here, right? So this low was at 105, this high was at 106. Coincidence? Not in my opinion. Prior lows and prior highs, guys. You got to pay attention to those, whether it's a daily chart or an intraday chart like we're looking at now. So this is one where the kinks kind of need to be worked out. So there's two things that went on here. We dipped all the way down to 80 cents. So from a bearish perspective, the stock showed just how easily it can give up all of these gains. And then the bullish perspective is, well, it bounced all the way back up to $1.05. So there were clearly a lot of buyers down there. Both of those are correct. And again, this just involves kind of the uniqueness of trading, where you get to decide which view do you want to take. Disagreements are what cause prices to fluctuate. So some of us are going to take the view, oh, that's bearish. It gave up those gains on really high volume and crashed pretty hard. Others of us will take the view that while it gave up those gains, it got a lot of them back and it bounced very nicely. Now, in my opinion, the volume pattern suggests greater supply at these levels than demand. Okay, we went down on high supply and we rebounded on low demand. So this down move here was about high supply and low demand. This up move here was about low demand and even lower supply. Which ones do we want to give more credence to? Which ones do we sense has more conviction? In my opinion, more is always better. So we don't want to get, while price action is king, meaning price action is always, if prices are rising, you can't complain. You do have to be cautious of the fact that this move back up was not very convincing in terms of the conviction behind the move as represented by the volume. So that's what I would point out with EGT. You've got this low here at 92 cents is going to be key, and you've got this high here at 106. Break below 96, break below 92 cents, I would expect a retest of this range here at 80 cents. Break above 106, I would expect a retest here of these highs around 112. TROV. So similar to the EGT intraday chart we just looked at, beautiful uptrend right here. Higher lows, 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Higher price action, 7 out of those last 8 days. However, the volume is very, very low. Okay, so this up move is about low demand and even lower supply. Now let's take it back and look if there's any real volume anywhere else that we have to consider. Okay, so there is, but it's right here, so there's no real volume at these prices. Let's see. You have some volume, but we're above that price. So this range right here, 107, from this, what was June 2006. So let's look at the weekly and try and get a tighter price range on that. So $1.25 to $2, that doesn't do as much good. $1.42 to $1.65, that doesn't do as much good. Okay, 107 to 125. We had some significant volume there. So we closed at 111. So 125, from here up to 125, there's going to be some resistance. And I'd be cautious about buying at these levels without some more volume. We need some higher volume because remember, we had high volume right here between 60 and 70 cents. At 120, these people are going to be looking at a 100% gain. Previous demand is always going to be future supply once the price is right. I gotta imagine that at 100%, the price is going to be right for some of these people. And in order to get through them, we're going to need an increase in demand. Okay? So this one, I would look to see if maybe it doesn't pull back to this range here. We had some prior highs here. And if you notice, that's where we had some consolidation. So even you could put it at the top end of those highs. So the pullback entry would be 90 cents to 96 cents, okay? Using these lows around 87, 90 cents as a stop loss point. Let's look at a 5-minute chart. And again, volume drops off a lot throughout the day, okay? So volume seems to come in at the open and then drop off. So this is going to be one that isn't very active throughout the day, so you need to keep that in mind. The price, however, does do a good job of holding its gains even when the volume is down. That's what I noticed most in the recent price history. And 570,000 shares traded at 65 cents pretty much in one block. So you better believe these people are going to be looking to sell some between 120 and 130, because it's only smart, right? I mean, at 65 cents, we're talking about, you know, $300,000 to $400,000 that traded here, and at 120 to 130, those people are going to be looking at $300,000 worth of profits, if not more. So you got to keep those types of things in mind. You got to be aware of where the volume traded and put yourself in that person's shoes and think, well, where would I take profits? And again, if you do that, those are the types of habits and characteristics of a good trader. So if you put yourself in their shoes and you think about things like that, it'll give you a better ability to make good trades. NNVC, I like this. Highest volume on back-to-back days for the stock since what looks like this period here in December. However, we're definitely in a downtrend, and we certainly haven't broken out of this downtrend. But we did have a one-year volume high today. Highest volume for the stock on an up day since April 5th, 2011. But again, just overall a really nasty downtrend on this one. And remember, when we have stocks in downtrends, that means there's a lot of supply at higher prices. So, and this stock has already gone from 55 to 80 cents. So I feel like I missed a good portion of the move. Now, the prices that we need to hold now would be this range right here. Okay, that's going to be the 68 to 73-ish cent range. Okay, as for resistance, you can see where it's coming from. This price congestion point, prior lows, some prior highs, closes, opens, all coming into play right here. Above today's high of 81 cents, we have this high at 86 cents. Okay, and then above there, we've got these highs at 90, and then 93, 95, and then $1. Again, I prefer stocks with uptrends. That's just my personal preference. I'm going to save SPY for last since it's the overall market. LATI, kind of similar to NNVC in that, you know, nice volume today, highest volume on an up day since this period here in July, but again, just a nasty downtrend, right? I mean, we've fallen from 3-something all the way down. But, you know, we do have to respect that volume and what it might be trying to tell us. However, from looking at the intraday chart, what I notice is that it all came in one trade. And that was at $1.11. So we'd want to buy as close to that. Whereas NNVC, the volume, while it did have a good chunk in one trade or 1 5-minute period, the volume was much more consistent throughout the day on NNVC versus LATI. Look at those gaps in volume. You know, that's just kind of a boring stock. And it went from 114 to 125 on literally nothing, which means it can come back down on literally nothing. If I was going to buy, I would want to buy as close to where these people bought as possible, because that's where all the volume came from. So that's going to be the 114 to 117, 118 range, okay? That's going to be, you know, the key level that it needs to hold now. As far as resistance, needs to break above 125 cleanly. But again, because we're in a downtrend, there's just so much resistance. And in our video last week, we talked about, uptrends versus downtrends and why we want to be in uptrending stocks versus messing around with downtrending stocks. And the main reason for that is because downtrending stocks suggest a historical bias towards supply, whereas uptrending stocks suggest a historical bias of demand. And prices rise when demand outweighs supply, and prices fall when supply outweighs demand. So we want to align ourselves with history. And history on stocks like LATI and NNVC suggest that supply is kingpin. So between these two, NNVC looks better to me than LATI because of the trading being more consistent and because of the back-to-back volume days and because the volume today on NNVC was a 1-year high versus LATI it's only 8-month high or so. And this trend has just got awful to me. I don't like this. So we need to break 125. And above 125, you're going to have resistance at this high at 128, 130, then this high at 131. And I mean, literally, you can just go every penny pretty much, and there's going to be resistance. So once you break 134, the next resistance point wouldn't be till 139. So again, I just believe based on uptrends versus downtrends, uptrends typically offer better opportunities. ISIM. We don't need to spend much time on this. This should be pretty obvious for everybody what I don't like. Gave up all of its gains. Volume really good at the open and then dies off. I just don't like this. This bag holder city right here, guys. That's what this is. These guys all buying up here, they're holding bags right now. They're down 50% and they're not holding bags because they're going on vacation. After this, they probably can't afford a vacation. So I don't want that. I want to be in stocks that are paying for people's vacations. BODY, disgusting. Ugly, ugly, ugly. Similar to GMCR, the money on the short side has been made in this huge move down. And we're going to have a ton of resistance. At today's high of 1520, yesterday's high of 1568, and then on the intraday, let's check this out. That's going to be the best example. Let's do this. Okay. Ugh. All right, that's what I wanted. All right, so this was the gap down to $17, right? So key support for this trend off the bottom here is going to be this low here at $14.92. And then you've got these lows here around $14.80. Resistance is going to be today's high at $15.20, which we talked about. And really the 1520 to 1525 range. And then you've got this high of 1536, and then the high of 1568. And above that, you're going to have a hard time dealing with these lows right around 16. That area acted as support. Now that it broke, I expect it to be resistance. Again, uptrends versus downtrends, guys. We want to be in uptrending stocks for everything we've ever covered in our classroom sessions. It's just easier. You want to keep things simple and as easy as possible. So CMG, we talked about in the beginning. Okay. Now, what's interesting about CMG is if you look at a longer chart, I mean, obviously, this is just parabolic uptrend. I mean, you don't see too many uptrends like this. Okay? And if you chart it over the course of that uptrend, there's really only one area. Well, there's two areas on the chart that I see as support. Three, really. Right here, around 336 to 344, because we had a 2-day down move and then, you know, a nice bounce, okay? And it was on relatively high volume, which adds more importance to that level. Right here, early February, from 370 all the way down to 358, and again on high volume, which adds more importance to that level. And then here, from 396 to 386 on relatively high volume compared to, you know, the surrounding days, which adds more importance to that level. So this would be the first area that I would expect support to emerge, between 396 and 386. And as you see today, if we chart that course, that's exactly where Chipotle managed to find buyers. Okay? So just wanted to point that out. Now, from a greater perspective, definitely a short-term downtrend going on. However, the overall chart is very, very much still in an uptrend, numerous uptrends as a matter of fact. Okay, so in order for the long-term chart of Chipotle to be damaged, there needs to be, or in order for the long-term trend to change, there needs to be more damage done to this chart. So we did break this uptrend, but like I said, still very much in a longer-term uptrend. Now, the thing I have noticed personally about Chipotle, and the reason I targeted it for downside this past week, okay, so we have this great uptrend and we have this huge volume dip right here. Now, we also had huge volume dip right here and a huge volume dip right here, and all it did was lead to higher prices. Can anybody tell me in chat what the difference is between this high volume dip here and these two high volume dips here in August and September? What do you mean, take notes? Right. I like the combination of take notes and Penny's answers the best. Let's look at it again. And there's another thing that I'm looking for somebody to mention. No, I'm not concerned about the market. I'll bring it out further. Or maybe let's look at let's give it 240 days. So we've got these, you know, high volume dip here and this high volume dip here. There's still something that nobody's mentioned yet. I like what you guys said about that it came at lower prices and it came following an up move like Take Notes pointed out. Those are definitely two things that are different between this high volume and this high volume move here. But there's also something else that I'm looking for. All right, I'll just give the answer. Think time frame, guys. Look how much price congestion we have in this range overall, okay? So this is our high volume. But look, we spent July 1st through really December 1st in that range. So this high volume, while it was high volume, number one, like you guys said, it came at lower prices. It came after the stock had been uptrending. After the stock had been downtrending. But the main difference is the period of time, okay? Chipotle had been churning in this range for a long time. It had just came from that range before, okay? Remember, when we have high volume trade in a range for a long period of time, that means we're giving supply and demand even more time to work itself out. We're giving the equation more time to develop and establish itself, okay? Up here, there's no previous congestion points. There's no area on the chart that we can look at and say, oh, well, here's our point of reference. We don't have that at all. All we have is a straight up move, like Take Notes pointed out. So when you have this major high supply down move, now you need to look for your point of reference. And as we pointed out, the only point of reference we've only gotten 3 of them over the last 6 months or 5 months, and that's not a lot. Versus we showed on the chart we were just looking at, we have numerous points of reference because we're in a channel for a much longer period of time when we have the high volume. We had high volume here in August. That was only the highest volume on a down move since this move here in July. We had a high volume down move in September. That was only the highest volume on a down move since August, okay? Now we have the highest volume on a down move since September. So the time frame of this period here, okay, is much greater than this period here. That's the point I wanted to make in regards to the time frame and why this high volume down move was such a red flag. Okay? So as for Chipotle, it might have definitely put in a key low right here. This low is going to be key, this 392.10 low. And today's high at 405.80 will be resistance. And then yesterday's high at 410.60. And then this high of 413.04 to this low of 413.37. Let's look at the intraday chart and look for where a lot of the volume came in. So you had a lot of volume here at 399.04 and high volume off this bottom. So this low at 395.15 to 396 and then this low of 399. The immediate low will be this low of 402.61. And we talked about the resistance points. But remember, guys, when supply and demand doesn't have a long time to, work itself out, the moves can be much more drastic. Okay? This move down here, it had already just experienced it. This time here in September, it had just experienced something similar. And this low was actually above this previous low. This low was above this low. This low was above this low, so on and so forth. Whereas more recently, this high volume down move took it below its most recent low. This high volume down move took it below its most recent low. Those were not truthful statements back here in August and September. So those are the types of things I noticed. Okay, SPY, last one. So, obviously, SPY is kind of going to be similar to Chipotle in that we've got a short-term downtrend, but in the more intermediate to longer term, this uptrend is still, it's still an uptrend. We've got higher highs on the weekly and higher lows on the weekly, okay? This level here acted as resistance. So this is the range I'm watching. That's going to be, for support, it's going to be right around, what, 133, 132-ish, okay, on the low end. And on the high end, we're right around 137. So we're in, you know, where longer term demand should be, between 130 and 137. And it's a wide channel. It's 1300 to, you know, 1350 on the S&P. Now, in the short term, we've sold off 4 out of the last 5 days. SPY today broke below its April lows. However, it's still above this low of March. But we now officially have, for the first time all year, a lower low and a lower high. This April high, this April-May high was below this March high. This now May low was below this April low. Okay? And so we've got this March low is very important. That's at 134.36, and that's 1340 on the S&P 500. And then below that, you'd have these two lows here. From February, which is 130.68 to 132.21, which is 1300 to 1320. Personally, I think that's where the market's going over the next month or two, but that's, you know, that's just my opinion. And the reason I feel that way is because the volume, again, what do we notice about the volume here starting in April compared to the rest of the year? And Johnny, Chipotle trades near Apple, yet Chipotle has a market cap of about 12 billion and Apple has a market cap of about 560 billion. So, yes, so I agree with you guys. More supply. Yeah, Pennies, I got your ticker at 5:02, 2 minutes after you're required to send it in. So that's why it's not on my list. So, yeah, higher supply. Highest supply down moves we've got here on today and on 4/10 of the year, okay? Now, the one thing I'll say about today's down move is price action actually stopped. It opened and closed right around the same level. So that represents some indecision here. And if you just look at the S&P 500, and I blogged about this for my post for tomorrow, we actually bounced 1%. Okay, so we've already bounced pretty hard. A 1% intraday bounce, that's a hell of a bounce. All right, so I wouldn't be surprised if we see a little bit of a bounce back up towards this 1373 to, you know, on SPY it'd be 1373 to some of these. Maybe this open around 1385 on the S&P 500. So 1370 to 1385 is where I would look to get short again. Okay, and in the grand scheme of things, SPY needs to break above this high, 139.30, which is going to be 1393 on SPX, in order to really, you know, then target this high around 1413, and then the ultimate high, 1422. So, you know, everybody looking for a sharp down move in SPY, it's not just going to happen right away. You need, in order for it to happen, the VIX really needs to get going. The VIX gave up all of its gains. So the VIX was up 10% today at one point, and it finished up 0.5%. So that's very telling in my opinion. If SPY is really going to sell off, you're going to see the VIX jump above 21. So I would not get overly bearish on the market. I would be open-minded to understanding that it's probably going to bounce because prices react to price. So the money has been made by shorting the market. From 1410 down to 1360, you caught a 4% down, 3 to 4% down move. You know, if you didn't make money then, I'm sorry, you missed it. Now you need to wait for a breakdown either to below today's low or a rejection at some of these prior highs. You don't want to just get in there and say, oh, it's going lower. That'd just be stupid. You don't want to guess. Guessing and hoping is not a good strategy. We don't do that. All right, so that wraps it up. And some of you, who didn't get charts that you had reviewed, I'm telling you, I'm not a liar. If you send your chart to stockhavencharts@gmail.com between 2 p.m. and 5 p.m. Eastern, you will find it on my list. If you don't find it on my list, I guarantee you that it was not sent to that email address between this time frame. I'm still receiving charts to stockhavenclassroom@gmail.com. I simply just delete those without even reading what the ticker is. Anything received outside of 2 p.m. to 5 p.m., I simply delete without reading what the ticker is. So simple as that. Everybody have a good night, and I will see you tomorrow. You are welcome.